Okay, time for our Fiscal Focus segment brought to you by InfoChoice, your choice of information on Australian consumer finance. Now, this week we wanted to talk about term deposits, which have experienced a bit of a renaissance with the dramatic rise in interest rates over the last 2 years. Joining us to discuss is Bank of Sydney's Chief Retail Banking Officer, Huw Bough. G'day, Huw. Thanks for joining us on the Savings Tip Jar.
G'day, Dom. It's great to be here. Thank you for the opportunity.
No worries at all, Huw. So just the first question, I was pouring through some of the APRA banking data and I noticed that Bank of Sydney has had quite a performance over the past year or so. The household deposit book grew from about $1 billion to 1.6 in the past 12 months. So just how popular have term deposits become at your bank?
They're a really important part of our strategy, Harrison. It's largely driven by what's happened in the market. If you go back to September 21, the cash rate was at sort of 0.05%. And so if you were looking to, if you had some money in the bank and you were looking to invest, your options were probably more likely to rest around equities or property. At the moment, with most institutions, you can actually find a 5 instead of a 0.05 in front of the number, and that makes it quite an interesting and a good proposition for customers. So we've found that in our particular case, we've had a 26% increase in deposits over the last 12 months. And it's largely, you have both existing customers as well as new to bank customers. So you've got a combination of the retail branches which have been growing, as well as the online proposition. And different customer segments have different needs. So it's almost a little bit like flares. Flares are back in fashion, and I think term deposits are too.
It's a great metaphor there.
Yeah, I can't say I'm too big a fan of the flares making the comeback at the moment. I don't really appreciate that look, but we won't delve into that too much since it's a finance, not fashion podcast. But it does make a lot of sense, doesn't it? I mean, you kind of think, why bother risking your money in shares where, it's obviously high risk and you're not going to get that sort of 4 to 5, 6% guarantee like you might get with a term deposit where it's obviously much lower risk and it's much more of a sure thing. But one thing I've often wondered is why would you put your money in a term deposit which is locked away as opposed to in a savings account? Is that because the term deposit rate is fixed and maybe at the moment with expectation of rate cuts coming in the near future, more people are deciding to lock in those higher interest rates?
Absolutely. I think it's a combination of all of those factors, Dom. We've got there's a degree of flexibility in the product set now that didn't exist before. So you've got certain customer segments that might have been looking to put away some money for a short period of time. And the 3-month term is actually very, very competitive now. So you can get a 5 on a 3-month term, as well as on a 9 or a 12-month term. And different customer segments will choose different terms as well. So I was in a branch the other day and I found met an older gentleman who was referring back to 1989 when, can you believe it, he was getting 17% on his savings. And today he's actually quite happy getting over 5. But it really depends on what the requirements are of the individual. We've got other people that are sort of younger generation looking to save for a car or a holiday, and with cost of living pressures, they find quite often spending temptations. They like to put away the money for a set period of time and know what they're going to get as a return.
For sure. So you kind of mentioned the competitive rates on shorter terms just briefly there, but why do you think that the market has shifted towards those shorter terms? It used to be, 1+ year rates were the most competitive. Now it's really below that 1 year threshold.
Great question. I think that it's certainly become more competitive, and it's a factor of a number of things. Back in during the pandemic, you might recall the RBA gave banks, I think it was about $488 billion. $488 billion to lend. And the time has come to pay that back. So a lot of the banks are now looking to do that, and they're competing to do that, as well as to fund their ongoing lending requirements. So competition is doing that. The rates for the longer term deposit terms have been priced based on the anticipation of the reduced cash rate, which you touched on. So I think it's a combination of all of that that's sort of driving the shorter tenures. But what we do is we actually look at the forecasts. We look at all of the different. We have a treasury department that looks at all of the different data points, and then we make decisions based upon our requirements.
You mentioned, people earning 17% back in the day. I mean, how great it would have been for those people if they could have locked in with a 30-year term deposit or something like that to still be earning that 17%. But unfortunately, that product doesn't exist. But on that, I mean, with term deposits, I guess a lot of people think about timing. When's the perfect time to lock in that term deposit? Have rates peaked? And I'm wondering, have we actually passed the peak in the term deposit market in terms of the rates that are available? I was looking on the RBA's through the RBA's data early this morning, and it looks like December last year was the perfect time to lock in that TD rate, and it seems to have come down a little bit. That sort of come down in rates, I mean, it's quite slight, but is that largely due to the expectation of RBA rate cuts in the near future?
So a friend of mine said that if you got 10 economists in a room, you get 11 different opinions. So in this particular case, I'd say that to a large extent, our view would be that it's more likely that the deposit rates that the rates have peaked. But that being said, I listened to an economist, ex-NAB economist, just this morning, and he was saying that it's likely rates will go up. So it's really up to the consumer. I won't pretend to know any more than anyone else on that one.
That's right. It seems like no one's really paying too much attention to what economists say anymore, especially when they forecast house prices to decline by 30-40% during COVID. And that, obviously didn't happen. But we'll move less to the sort of longer term view now, but the sort of week to week view on term deposit rates. And, us at Savings.com.au, we write about Bank of Sydney quite often, and we notice that you guys adjust rates here and there, every so often. So, fortnightly, weekly, whatever. What's driving that slight tinkering of rates from week to week, month to month?
There's probably three things behind that. One would be the customer behaviour and demand. The other is the organisational strategy and position, and the third one is the market conditions and competition. In relation to customer behaviour and demand, I think at different periods, whether it be Christmas, holidays, all of those sorts of factors will impact the amount of savings that are in the pool that we can compete for. And then the better periods of time around the February, March, post the Christmas period, that we're able to attract even more deposits. So there's the customer behaviour piece and what they're looking for. There's the organisational strategy and position, which is making sure we've got the minimum liquidity holdings, and we also meet our funding needs, as well as the cost of funds and the yield management. What's interesting is in the retail side of things and the direct channel. So you've got essentially two channels. If consumers want to deal with us or most lenders, they can do so online, and they get a digital experience. And there are those that choose to deal with us through the retail bank and through our branches. And there's actually a difference in the retention rate. So what we find is that you need the digital experience, but you also need the human touch as well. And because we're a small organisation, we like to think that we can deliver on both of those for our customers.
Now, Huw, it looks like in the next few months, households are going to get a fair bit of a financial boost with the stage 3 tax cuts kicking in, and then also, things like energy assistance payments. There was the federal government announcing $300 there, and then up here in Queensland, we're actually getting $300 from the federal, but also $1,000 from the state government. So, I mean, with all that support for households, you'd expect people to have a bit more cash on hand to save. So, would you guys be expecting, a surge in deposits when all that kicks in?
We're certainly hoping for. We're very much open for business, Dom. So we're keen to attract up more than our share of customers, and we appreciate every customer that comes in the door, and we certainly want to keep every customer. But our view would be that the market will probably see a little bit more going into savings off the back of that. And did I read somewhere or hear something somewhere, Dom, in terms of your government's actually reduced the cost of transport too, potentially?
That's right.
50-cent fares from August. They're chucking all the money they can to win this election. I'm going to
benefit massively on that because I actually commute from Gold Coast to Brisbane twice a week, and that's train fare from the Gold Coast is $12 each way. So that'll be 50 cents each way instead. So I've worked out I'll be saving myself over $40 a week.
Right.
So
I hope you. Sounds wonderful, and we'll give you a healthy 5% for 3 months if you.
Sounds good.
Like
on the sell.
Appreciate that. Cheers.
There we go. Huw, I want to ask you about shares versus TDs, and they kind of cater towards different savings goals, I suppose. But the share market recently has, especially in Australia, has recorded a massive sort of bull run at record highs for the ASX. So why would you choose a term deposit over, say, an ETF or something that tracks the share market?
So this would be obviously a personal opinion, no advice on.
Not financial advice.
No financial advice on this one. But I think there's certainly a lot more anxiety in the market. People are thinking that there's more risk. And at this point in time, I think you would find that there's a large part of the market is saying, I'd rather put my savings into a term deposit, have a guaranteed return, and that might be 5% versus putting it into the share market where there was risk. But the good thing is with a term deposit up to $250,000, it is government guaranteed. So there's peace of mind. And if you've got short-term savings goals, then if you put it into the share market, who knows how that would perform over 3 months, 6 months, 9 months. But at least if you've got peace of mind knowing that you could get at least 5% by putting it with a bank.
Yeah, that's $250K government guarantee certainly is a huge advantage for term deposits over other investment assets. Huw Bough, really appreciate your time on the Savings Tip Jar talking about everything there is to know about term deposits. So thanks so much for your insights.
Thank you for the opportunity.
Thanks so much, Huw.